All right, welcome to the Hudson Board of Trade. Here are the earnings lines for the week of November 29th. Just to note, we have traded 250,000 HBOT shares here at the Hudson Board of Trade, and I have had definitely a handful of students go from my school into actually trading real options contracts. So this is for educational purpose only. I was a market maker on the floor for 20 years. And I think I've developed a game and a way to teach people how to trade or market make that's fun to play, and you'll learn a lot about trading. So let's get to this. We have a short week because of Thanksgiving. So on Monday we have Palo Alto Networks. It's a $250 stock. The straddle is worth $15. So to get the break even, I take 15, subtract it from 250 and get 235. And then I take 250 plus 15 to get 265. So if you think Palo Alto Networks is going to stay inside this range, 235 and 265, you want to sell that straddle. If you think it could move outside of this range based on earnings, you want to buy this straddle. And that's going to be the case for all these stocks going forward. So HPE after market close is when the earnings announcement is. It's a $17 is the strike. The 17 straddle is worth 90 cents. That's about 5% of stock price. So the break even 1610, 1790. If you think it's going to be within this, sell it. If you think earnings could take it outside of this range, you'd want to buy it. Then on Tuesday, we have Dollar Tree before market open, $112 stock. The straddle is 625. That's about 6% of stock price. The break even's 105.75 and 118.25. If you think it's going to be somewhere in this range, sell it. Outside of this range, buy it. Then we have HPQ after market close, $20 stock, dollar straddle, 5% of stock price. The break even is 19 on the downside, 21 on the upside. Sell it if you think it's going to stay in this range. Buy it if you think it can move outside that range. Dick's Sporting Goods before market open, $40 stock, 350 straddle. It's about 7.5% of stock price. So the break even is 36.5 on the downside and 43.5 on the upside. Best Buy before market open, $73.5 stock. 5.25 is the straddle price for Friday, 7% of the stock's value, so 68.25 on the downside, 78.75 on the upside. If you think it's going to stay inside this range, sell the straddle. If you think it can move outside of this range, you want to buy the straddle. Hormel, HRL, before market open, 42.5. The straddle for the week is worth $2. That means 40.5 on the downside, 44.5 on the upside. Anacrombie & Fitch, this is our highest vol of the week before market open. It's a $16 stock, and that straddle is worth $2.25. So the break even is $13.75 on the downside and $18.25 on the upside. If Anacrombie is going to stay inside this range, sell the straddle. If you think Anacrombie can move outside of this range, buy the straddle. Then we have Burlington Coat Factory, $207.5 stock. The straddle's worth $18. That's about 9% of the stock price. The break even is 189.5 on the downside, 225.5 on the upside. Stay inside this range, sell. Outside this range, buy. And then on Wednesday we have Deere before market open, $175 stock, $7.50 straddle. That's about 4% of stock price. 167.5 on the downside, 182.5 on the upside. Stay inside this range, sell it. Move outside this range, buy it. So I'm just trying to create a fun game that you can play as a beginner. I've made these contracts smaller, simpler, and safer for beginners to use. And if you play this game long enough, you'll learn how to market make. And then once you know how to market make, you'll learn the strategies behind trading in the open market. So please, if you like what I'm doing, thumbs up my videos, comment, subscribe to my YouTube channel, and please think of being a member of the Hudson Board of Trade. Thank you.